data for the week ahead. We'll just quickly look at the economic calendar just to give us a heads up. Fairly quiet day Monday. Tuesday's also fairly quiet. And then we've got a big day on Thursday. We've got the CPI data. And you know how volatile that is. So that's going to be the risk event this week. It's looking like it's going to continue higher, but the consensus is higher than the previous. If it carries on, it's going to be the Fed might have to intervene earlier than imagined. They're talking about a 50 basis point hike. They might have to do it if this is an extraordinary beat. They'll probably have to aggressively hike. So that could be dollar positive, and that could be risk off. So just bear that in mind. We could be a fairly choppy week, and so that's just something to bear in mind. We're going to all eyes on the inflation rate in the States. So that's that. We'll look at the bubbles quickly. Average bubbles. This is the new tab. We're using the daily bubbles and weekly bubbles, but an average of those two factors. So it's fairly straightforward. Could potentially remove those two, and then we could just look at the average bubbles. But the daily bubbles and the weekly bubbles are also quite handy. That would be more like for swing trades, and this would be more for intraday. This is an average of the two. So the Kiwi is weakest, and the Euro is strongest. So assuming that the Euro comes over here and the Kiwi comes over here, the Euro Kiwi would be a buy, and likewise the Euro Oz, the Euro Yen, and also the Pound. It all depends. If the currencies come over here over time, then they'll become more of a buy. If the currency comes over here, it's more of a sell, because they're already long but they're going to add long, and they're already short but they're going to add short. If they do that, it's normally quite a contrarian indicator that they're trying to dig themselves out of a hole. Look at the Euro USD, for example. It could continue higher, but that's the thing, isn't it? We don't really know for sure. This Thursday is going to be very much of a roller coaster, so trade carefully. I think maybe Monday, Tuesday, Wednesday might be okay, but Thursday is going to be quite volatile. So let's talk about the COT data. I thought we were going to have a crossover of the contracts, but we didn't, and you can see they're both in descent, which is very interesting. I thought we were going to have a cross, then that would be the Euro USD buy indicator, but currently they're both in descent. So let's quickly look at the others. We'll keep the dollar as like the common denominator. We could potentially keep Euro on there, but yeah, well, we'll maybe just add them. If it's maybe too confusing, I can just take them off. So they have changed colour slightly. The Aussie is negative. We are ticking up. The Euro is ticking down. So that is interesting. So keep an eye on the Euro Oz, and that might indicate some risk on. Okay. Maybe we'll add pound. If it gets too much, I won't do this going forward. But I think it's probably not going to be too bad. There's pound quite strongly in descent. So you know, maybe the pound Oz could be a good trade, but ideally you'd want the two to cross. And then we'll add CAD. Yeah, add CAD. There's going to be quite a lot. CAD, the grey one, so CAD's going up, so that's bullish. So only the Aussie and CAD are sticking up, they're pointing up, okay, so far. And maybe we'll look at yen. I know this is going to be quite negative. Ah, okay, that's interesting. The yen is ticking up quite strongly. So maybe we're going to get a pound yen sell signal here. Can you see how the pound's pointing down and the yen's pointing up? If they continue that way, then could be a good one. Could be a good short pound yen. So that's that. Maybe we'll add gold, but we know gold's going to be up here. It's always been strong, but we'll add it anyway. And there's gold. Yeah. Oh, okay. That's quite interesting. Maybe you could wait for a breach of that support. 162,000 contracts. It's very bullish. So maybe you'd want to wait for the next week's report in order to go fully bearish on gold, because we've still got these supports. You see, and once we go below 162,000, that's going to be quite bearish, because This dates back to 2020, so you know, if the big fish decide to dump gold and we do break that support, it's going to be quite bearish, because then we'll just go closer to the zero line. And so that's that. Hopefully it was useful. Hopefully this way that I've done it is not too bad. It might be too much information overload, but I suppose you can just like take a screenshot and you can just analyze it that way. Don't forget, we've got the inflation data from the States on Thursday. So have a good weekend, and also thanks very much for the likes and the comments about the Quant Tower. I really appreciate it. It's just like taking 20 seconds out of your day to write a comment. I really appreciate it. It's really good, and thanks for that. I'll speak to you guys tomorrow nice and early.